Hello and welcome to another edition of Stockwatch. As we get into the back end of the trading week, there was a report yesterday that caught my eye after Netflix shares jumped by almost 5%. And this was because the streaming giant had a very bullish earnings review from analyst Cowen Co. So basically in the third quarter, which has just ended, 2,500 people were asked which media platform had the best video content right now, and Netflix came top of the pile with 28% rating, which is quite good considering all the competition that is out there at the moment with Disney Plus, Amazon Prime, to name a few. The stock had reached another all-time high yesterday, and having posted a market-beating gain of 11% in the last 3 months as well. So whether Netflix misses or beats estimations on the October the 19th, which is when their earnings report comes out, we're expecting very large growth in stocks, or the momentum to keep pushing at least for the time being. But we'll check out the charts shortly to see if there's any potential signs of a reversal there. So either way, Netflix does remain possibly the best streaming service out there at the moment. I just want to take a look with Netflix, just want to take a look at Disney Plus as well. What's quite important with Disney Plus is they're not really looking to beat Netflix in subscriber growth at the moment. They did do well when they launched in 2019. However, they are looking like basically just to keep going with the subscriber growth at the moment. Obviously, because they're not making any money, they're making from Disney Plus, they're making money on their other merchandising, such as their theme parks and broadcasting television as well. So nothing to worry about for Disney Plus at the moment. Just wanted to highlight their ascension as well. So as you can see here, I've got it on the daily chart at the moment. Netflix hitting more all-time highs here. The only thing I would have a look at is there is a slight bearish divergence on the RSI here, so just seeing if that's going to come into fruition on a slight, if the momentum does start waning slightly. But all in all, until the earnings season report, we are expecting another leg higher, but we'll see how far that leg can possibly take us. Obviously trading very far above the Ichimoku cloud as well, so that's quite distinctive in the bias being to the upside. Again, on the 4-hour chart as well, looking like we did touch the cloud in the last few trading sessions, but as you can see, we've bounced off that, and now we've had another leg to the upside, which is very important. Just got this bearish divergence lingering at the moment, so I'll just keep an eye on that to see what the opportunities are in the near term at least for Netflix. Disney, on the other hand, as you can see, they're not being very profitable at the moment, but subscriber growth is their #1 priority currently. So we'll just see what's going to happen in the long term with that. We've got this kind of sideways channel at the moment, and we're just looking to see what the next step is for the streaming giant, as well as it tries to compete with Amazon and Netflix. So the thing is here, with the mean being very close to the Ichimoku cloud, we're seeing basically if this Ichimoku cloud is going to be a hindrance to this sideways channel, and to give us a next direction on if we're going to break lower or break higher. If we break higher, then obviously naturally then these recent peaks will be tested, but if we break lower, then I'll be looking at another test to this recent low as well. So just a few things to look out for Disney if you're trading it. Obviously look out for the earnings reports that is coming out shortly. We are just starting the earnings season now, so it's very, very important for a lot of stocks that you don't miss out on anything. As I said in yesterday's Stockwatch video, check the earnings season calendar. It's very, very important if you're trading any of these stocks, because it could give you good opportunities, but also, it could give you, if you've got open positions as well, it could give you some cause for concern, especially if you don't have any pending orders, such as take profits and stop losses in your open positions. So just to protect your risk capital. So that's just a few things to look out for as we push into the earnings seasons. And that's all for today from the Stockwatch. And we'll reconvene again tomorrow. Bye for now.